Welcome back to the afternoon sessions. I really hope you enjoyed your lunch and made some great connections. I'd like to thank Swift, our Platinum keynote sponsor, for the next session. From Sydney, Australia, head of Oceania at Swift, please welcome to the stage Suresh Rajalingam. Now, Suresh currently heads up the Oceania Swift team, covering 20 countries in the Oceania region. Suresh is a seasoned senior payments professional with more than 22 years business development experience in both the domestic and cross-border payment space. Joining him, also from Sydney, is General Manager International Payments and Network Management from Commonwealth Bank, Susan Yang. Susan is responsible for leading international payments products technology and correspondent bank network management. Prior to joining Commonwealth Bank in 2017, Susan spent 16 years with Citigroup in transaction banking. Now, our fireside chat topic is Journey to Instant and Frictionless Payments. Today, payments are more complex than ever before, from high value to low value payments. There is a need for greater efficiency and transparency across the entire payments ecosystem. Now, in this fireside chat, we're going to explore the move toward instant, frictionless payments, richer payments, messaging, and connecting domestic market infrastructures with platforms. Give our panelists another big round of applause as they sit down. Thank you so much, both of you, for making the trip across the ditch to be here. I thought we'd probably start maybe with you, Susan. Cross-border payments are essential to international trade and global economic growth. So where do you see the main areas for improvement?
There are multiple areas we can certainly improve upon, but considering today's topic is instant and frictionless payments, maybe I will just pick two areas which we have to certainly have been put a lot of efforts towards. One will be the greater certainty and transparency for our customers when it comes to cross-border payments. Secondly, will be the speed, which is speed is the king. So firstly, we start from greater certainty. I think when you think about a traditional way how cross-border payments are handled, one of the key friction points based on what our customers have been telling us is the uncertainty and transparency related to correspondent banking fee deductions. Depends on where the money is going to, depends on which correspondent banks are involved, or how many correspondent banks are involved. Then it's very difficult to try to predict how much will be the amount will be deducted, and what's the exact amount your overseas recipient can receive. So what we have done from Commonwealth Bank perspective, now we're really absorbing all the correspondent banking fees for our customers, really remove that uncertainty for our customers. While it is a welcoming change for customers across all segments, I would say, based on the feedback we heard, the business customers in that segment respond to this extremely well. The main reason, when you think about it, because they are trying to make payments to their overseas suppliers, who typically they expect the exact amount as per what's on the invoice to be received for multiple reasons. It could be automated reconciliation for your suppliers. It could be regulatory reasons in certain jurisdictions because they're expecting exact amount for declaration or custom purpose. So that couple of like $20, $40 deduction itself, not necessarily due to that amount, it might be small, but that discrepancy create a lot of pains for our customer. So that's the one thing we've done, which receive very positive feedback in terms of ensure greater certainty. When it comes to speed, compared to the real-time payment experience in some markets, the cross-border payments is not end-to-end real-time yet in most cases. However, there are things banks as an industry we can do to improve on the end-to-end speed experience for customers. For example, we can start to enhance our cross-border payments processing system now and extend the processing time. So earlier this year, what we have introduced is we now can process cross-border payments 22 hours a day, 5 days a week. While it's not 24/7 yet, that really laid down a solid foundation on our journey to get there. And the other thing you can think about is to constantly review and enhance your straight-through processing capabilities. Because unless you're willing to hire an army of people to do night shift, the better investment could be to work on your AI and work on your machine learning techniques so that you can automate the repetitive repairs. Therefore, when that's coupled with longer system processing hours, meaning your customer can receive the funds and have availability to those funds early on. So Mike, those are just two practical examples I can think of to address some of the areas of improvement.
Yeah, so no fees and longer processing times. Wow, that sounds amazing. Suresh, have you got anything to add to that? What's Swift doing?
Yes, thanks, Mike. Transfer of value across the borders is actually quite complex compared to a domestic payment. So when it comes to cross-border payments, we are controlled by local jurisdictions when it comes to capital control and its associated compliance checks. As Susan highlighted, the local operating hours and the data model within a particular country may be different from other countries, so there is always a discrepancy in data. And so from Swift point of view, we identify these as frictions when we are processing cross-border payments. So our mission is to basically standardize this whole payment landscape and achieve an instant and frictionless landscape. So for us, instant means real time. So whoever is in the value chain process the payment real time. And the frictionless means do it right first time. So if someone doesn't do it right the first time, there's already a friction introduced. So we have identified multiple friction points in a cross-border payment landscape, and we are basically trying to eliminate those friction points. Okay, and make it seamless, and also process these payments in a very secured way. So as a network provider, that is our priority, and that is our mission also. So we are working with our community, which is made of all financial institutions, and it is a collaborative approach, and we would like to achieve the instant and frictionless model sooner than later.
Susan, how can banks service smaller companies and individuals, and are you able to meet their cross-border payment needs too?
Yeah, I think there are different ways we can do to certainly help meet the needs of the small business and individual customer base. As a matter of fact, we have a pretty big retail-focused customer base in Australia. So I think we have really good building blocks now available to help meet those needs. For example, the more jurisdiction rolling out the real-time payment systems, and then we are together with Swift, we're implementing the ISO 222 standard, which will resolve hopefully those different file formats, different country clearing formats, which result in truncation, etc. Those friction points will be removed, and what that means to our small business and retail customer will be, for example, we can improve the end-to-end speed. And then we can also make sure the full rich information can pass on end to end. And then also the other thing to consider, there are other initiatives. For example, Swift started launching the Swift Go, which we also recently adopted. What that will provide as an option for low-value cross-border payments is the enhanced predictability in terms of the fees, and also talking about the guaranteed SLA as well, so that if all the banks participate there, they will have to stick to the guaranteed SLA, and also the real-time status update, so that customers will know exactly where their payment is. So I think those practical things coupled with revamping the digital experience will make the process more seamless going forward for this particular customer sets.
Suresh?
So just leading from what Susan said, so we are also in the process of building a digital platform. Okay, so because when it comes to orchestration of payments, we want to build a platform, and we would like the banks to innovate on top of the platform. Okay, we want to use the banks to use the platform as a foundation to build the solutions on top of it. So the first and foremost requirement for it is to have an enriched data and messaging standards. That's why we are adopting ISO 222 standards for all the payment messages, which will be going live for cross-border from March next year onwards. So the foundation is set. It's based on ISO 222. Okay, so that's where all the data is captured. And what we build on top of it, we are building this digital platform where it is not just open for financial institutions. We also want to remain agnostic to other fintechs also. So how they can integrate their technology they have developed for the mutual community where we play, and how they can integrate their solution and technology into our platform, which we are building in the middle. So that's a key role, and we are also will be including AI and ML technology into that. So because we are sitting on a huge database data, and we are also building the data, we are also capturing the information from our customers and also from external sources. So we are building the data where we can create artificial intelligence solutions in the future, which the community can utilize. So.
Great. Suresh, what about central bank digital currencies? What role do you see them playing?
Okay, so the recent, one of the surveys published by Bank of International Settlements is basically nearly 9 out of 10 central banks are exploring central bank digital currency. As we heard from the Assistant Governor of RBNZ this morning, RBNZ is exploring one. So which makes up nearly 90% of the global GDP, these economies we are talking about. But these are digital form of a central bank's currency. The use cases are still being discussed, how they can use those currencies in reality. But what role SWIFT can play is we are not going to play a role in building a platform for issuing a central bank digital currency. Okay, but where we see a role we play in this particular ecosystem is where we can interlink these multiple CBDCs across the globe when it comes to cross-border payments perspective, and make it interoperable. Okay, so that is our strategy and that is our mission. So we have done experimentation around multiple CBDC platforms integrating. Okay, we are integrating multiple CBDC platforms, bringing them under one standardization where they can talk to each other. We also experimented the new CBDC platform talking to traditional market infrastructure payments platforms. Okay, so and the results are all very positive. Okay, so this works, and we can interlink this ecosystem under one umbrella. So that is the role we are playing. So, and we are not building the platform for CBDCs, but we are interlinking the platforms, and we will remain agnostic to whatever technology these CBDCs are using.
Susan, can I ask you, what else are the banks doing to promote and innovate in the payments landscape?
Yeah, so Mike, I think there are different things, so it's broader than cross-border payments. In the payment space, for example, to have a true real-time 24/7 core banking platform is a foundation. Before, in the market, you want to go live with real-time systems. So CBA implemented that possibly about 10 years ago, so well ahead of 2018 launch of MPP. Then once you have the domestic capability, like since February 2018, since Australia, we launched the domestic payments. Now to expand that to really offer a real-time cross-border payment experience is the logical next step for us. So the hurdle we need to overcome right now, the delay usually happens when you think about cross-border is the last mile. It's the domestic leg of the international payments, because usually we're subject to the cutoff time of the domestic, say, HVCS system. So for Australia, I think it's 4:30. For New Zealand, I believe it's 5:15 for HVCS. So post that time, you still receive instructions from overseas banks. Could be in the middle of the night, early in the morning hours. Unfortunately, if the beneficiary is not with you, you have to wait till the system opens on the following day before you can pass it on. So that's why MPPA in Australia, we already announced right now in December 2023, that's a target date for us to be able to process the domestic leg of international payments via MPP. So by then, meaning we can start to pass on the domestic leg to any banks who are participating in MPPA real-time, 24/7, 365 days. So that will be a really much better customer experience when you think about if you're expecting to receive a birthday present funds from your overseas grandma. If she only remembers to do that in the middle of Saturday night, you can get it straight away. So that's the different experience you will be able to enjoy. However, without waiting for December 2023, there are things we can start implementing now. So in addition to the enhancing the IMT processing platforms, extend the processing hours. What else we can do? For example, real-time sanction screening. Because the key difference from risk perspective, from financial crime perspective, between purely domestic transactions versus domestic leg for international payments, a much heightened sanction risk involved for international one. So that's why we have already implemented real-time sanction screening capability from technology perspective, so that we are step ahead. We are ready. Whenever say December 2023, we need to turn on the domestic leg for EFT, our technology foundation is already there. So you don't need to congest everything as per the industry compliance date, because the reality is, right now, even with the delay globally, and also HVS, I think in both Australia and New Zealand, we are now pushing out day one launch for ISO to March 2023. There are a lot more work need to be done for the phase 2 of ISO, right? Before the end of the coexistence period, which is like November 2024 for Australia and November 2025 for New Zealand. So you don't want to wait till, okay, that's the must do date, or we need to go live, then leave everything to the last minute. Because the reality is, you will really be struggling with the funding and capacity by then. Because I think most of us, possibly in a similar boat as my team, we truly rely on similar type of SMEs who've got years and years experience knowing your banking environment, knowing how your system talk to each other. So you really need to span that out, plan ahead, so that you can have a really good really timeline. What other things you can do now without waiting for the industry compliance date? Maybe one last thing from innovation perspective is the pre-validation service. So talking about removing the friction points, the best way to do it is to kill that at the point of payment entry, rather than trying to adding more people to your help desk so they can reduce the wait time when customer try to call you. The reality is, the younger generation, they never want to talk to any help desk. Regardless whether they are located offshore, onshore, that's not a selling point anymore. People hate to dial a number and wait on the line, even if it's only 1 minute or 2 minutes. So how about we can use our technology, eliminate that chance of error up front? So recently, what we've signed up for is the Swift pre-validation service. We are in the process of integrating that with our digital channels by API. So what that will enable is we can tap into the central Swift pre-validation service, use that information, also the information provided by other participant banks globally, to really help our customer at the point of them entering instructions into our digital channels. We can validate beneficiary accounts, right? We'll be able to tell whether that's a reachable account. And for certain jurisdiction, depends on what the legislation allows. Some the providing banks, they might be able to tell you even the percentage of the account name match as well, to help you to predict how reliable that beneficiary account information is. So that will really help eliminate, for example, fat finger, when you're typing a number which actually doesn't exist, then that real time will be able to tell you this account number doesn't exist with that beneficiary bank at all. Do you want to call your beneficiary and double check, right? Things like that. Those alerts can be built upfront. I think that we'll watch and monitor, of course, post-implementation, but we're quite confident this can really help minimize the errors related to those international payments. And what does that mean to customers? They will reduce the chance of return payments. And we possibly all know, because we're working in this industry, how long that might take. Because if you need 2 banks to get there, you need another 2 banks involved to get the money back. And then both ways, there will be fee reduction. And then the FX very likely would have moved, and 90% of chance they moved in the wrong direction. So either customer wear the loss, or this become a complaint, get escalated to the regulator, then a bank are forced to wear the loss. Even though your TNC possibly have very clear disclaimer, you are subject to such FX movement, which is not a bank's problem. Might not be the case when it comes to escalation. So I just thought, those are the worthwhile investment for us to make into our digital experience, really avoid those unnecessary overhead in terms of people, in terms of bad customer experience, reputational risk. Those are the things, practical things we can do.
That's the whole concept of it being frictionless, yes?
Correct.
Indeed, indeed.
Fantastic. Suresh, do you have anything to add to that?
Interesting, because Susan just highlighted how hard it is to run a bank in the payment space, actually, so it's frictions everywhere, correct? So some of the things which Susan highlighted is underpinned by SWIFT. Okay, so the new payments platform in Australia runs on SWIFT network. We are the basic infrastructure provider. We innovate along with the community in Australia. Okay, so they're adding more and more innovative components to it. So we launched addressing service, and now we got the pay-to service in there for standing orders and all those type of things. So we are innovating with the community. The pre-validation, which Susan touched on, which is a 100% API-based solution. So this is where most of our investment is going, in APIs and artificial intelligence going forward. As Susan said, that if you validate a payment message upfront, the entire friction is removed further from there. Okay, so that's where, because the friction starts from the beginning, actually. So if you put incorrect information in there, it is going to be stuck somewhere. Okay, so we want to eliminate the friction as much as possible at the point of entry. Okay, and we are investing heavily in that space.
Yeah, I love what you said there, Susan, about don't just add more people to the help desk.
Yes.
No, that's another way of the investment, which customers don't appreciate.
Absolutely correct.
Okay, I've got one kind of broad question to finish with, but what are some of the benefits of richer data and greater transparency across the ecosystem?
Obviously, ISO 2022 bring a lot of benefit in that regard, but that has been talked about a lot. So I'm not going to repeat that, how that will help with richer data reporting, how that will help improve operational efficiency. I want to share another very different kind of use case, how we can use the rich data available in the newer way of payment. So how we can use that to combat financial abuse. Like when we look at the data back in 2020, in Australia, 623,000 people have reported they've experienced financial abuse. That's 1 in 30 women and 1 in 50 men. I don't know why men subject to a little bit less of that, but that's the data in 2020. So in order to address that, CBA have launched a next chapter commitment. So that is a commitment bank-wide we are between us and our customer in our efforts to help end financial abuse. So you might wonder what banks can do practically. Because what we found, one of the key support we can provide to our customers is to addressing the technology facilitated financial abuse. And the behavior usually appears in such a way. Customers are the limiters. They include abusive language in the payment transaction description. That becomes more prevalent since the introduction of MPP. And you might wonder why. When in the past, payers use direct credit, only in Australia only allow 18 characters of transaction description. So even though if you want to include something abusive, it's quite limited what you can put in. However, MPP brings a whole new world, 280 characters. So they can use their imagination and put in a lot of really threatening message there, which has caused significant emotional impact to the victims, as per what our customers have told us. So what we have been doing, really we have been leading in the Australian banking community, is we leverage our AI and also machine learning capabilities, specifically looking out for those descriptions, and that's an ongoing updated database we can always enrich on based on what we observe. And that coupled with our tool to automatic payment filter, we can automatically stop those transactions. And if that's become repetitive after alerting, we will reach out to those remitters and end the bank relationship with them. And at the same time, we start to coordinate industry-level efforts as well. We don't want this just become a benefit for CBA customers. So we've leveraged the industry forum, our representation there, working together with industry body like MPPA, really coordinate industry-wide efforts. Because the efforts can't stop with one bank. We really work together as an industry. Leveraging that technology, we can all build, really combat that. Because otherwise, the rich data information can bring unintended consequence in a negative way for a very small portion of the remitters if they choose to use it in an appropriate way. So that's just another different use case, how we as bank can use the rich data to identify and combat such behavior.
That's fantastic. Suresh, do you have anything to add?
So it's rich data, but the most important part is it is structured data. Okay, so because the more structured the data is, more machine readable it is. Okay, because that eliminates a huge friction in the payment space, because data is very important and what is written in the message is very important. So with the launch of ISO 20022, we are also launching structured data. So we're bringing it as much structured as possible. Okay, what is written in there, so the machine, whichever the technology the banks or other community members use, is readable, machine readable. So that's what we are. That's why we are launching ISO 20022 in March next year. From there we build other solutions. Okay, so the richer data obviously provides a lot more information. So especially in the cross-border payment space, which is trade. So because there's a lot more information can be captured in a MSMI. As Susan says, only 18 characters is very limited. Okay, so in a cross-border space, we are talking about 36 characters. So we want to extend that information. Okay, so in a more structured and enhanced data perspective.
Fantastic. Well, thank you both so much for this fireside chat. Could you please give a big round of applause for Suresh and Susan? And once again to Swift for being our Platinum Keynote sponsor for that sponsoring session. Thank you so much.